All right, everyone. Here we are with ticker symbol NIO, Neo Inc. Before we jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. Hope you guys find this video helpful and informative, and it means you well. To all my subscribers, welcome back, and let's jump into this chart. Neo has had a bearish run. It actually fell from the highs here of $21 and some change. It hit that twice, and we're clearly seeing that's an important resistance, and it fell down to lows of $15 and some change. There's been a recovery. It dipped again, hit lows of around $17, and there's been a recovery that finally the bulls actually broke through the 50-day moving average, getting this one back up. But we are seeing Neo have some trouble maintain itself above the 50-day moving average, because every time that happens, it reaches new highs, right? Today was 1943, and then quickly it dips again, and it leveled off at 1899, but it's really close to the 50-day moving average, and the bears are trying to dominate this. Yes, resistance levels were broken through, 50-day moving average was broken through, and it leveled off slightly above it, but there are some points here to pay close attention to with our new resistance levels and support levels for tomorrow. So I'm going to go ahead and move these lines to their new location, and we're going to see what is important for tomorrow. So our support is actually slightly below the 50-day moving average, probably by like a cent if we zoom in here and get real close to it. Yeah. And then our resistance is a little bit more up. There we go. So leveled off at 1899, and our 50-day moving average is 1885. I'd write down those both numbers, the where we closed off, where we're going to start off and see where the tug of war heads early in the day and throughout the day, right? Starts off at 1899, and the 50-day moving average is 1885. Very important. As long as the bulls stay above that, they're in control and they're in full health, and they can start to work their way up and stay above it in bullish territory. But if that gets broken through, right, 1885, the bears are starting to gain control. So that's something to bear in mind and remember. So write that down just for point of reference to know what side of the chart we're on. So the first thing I'm going to talk about is our resistance level, and that's 1946. The bulls are going to want to break through 1946, turn that into support, and start to work their way up to newer highs and new resistance level. By doing that, they're maintaining themselves in bullish territory and pulling themselves further away from the 50-day moving average of 1885 in an upward direction. So the bulls need to break through resistance. That's the highest point that it reached. And if we zoom out, it actually slightly levels off with the highest point before this fall of hitting new lows way down here within the last couple of days of 1767. So 1946 is very important. There was a resistance there at 1945. This is just 1 cent difference. So it got rejected twice in the last couple of days, and it hasn't been able to break through that. Super important for the bulls to break through 1946 so they can start to work their way up to newer highs and reach new resistance levels. So they have to break through that to maintain control, maintain the momentum, and pull further away from the 50-day moving average in an upward direction. Now, on the other hand, we have what the bears want to do. And the bears are super close to this. They actually broke through the 50-day moving average by 1 cent towards the end of the day and leveled off at 1899. And they're going to try to do this again tomorrow. So if the bears are able to accomplish breaking through support, which is 1884, they've accomplished two things. They broke through the 50-day moving average and brought this down to newer lows, getting it into bearish territory, and they broke through support, which is now getting them to hit new lows, new support levels, and hit bearish territory as well. If this support level does get broken through, the next point of reference, which is the next support deeper into bearish territory, is 1846. Now that is a little bit of a stretch, but if 1846 does get broken through, the bears have dominated this and they've actually gained possession on this chart. Not only is it in bearish territory, it broke through two support levels of 1846 is broken through, and the bears have managed to get further away from the 50-day moving average of 1885 in a downward direction. But before that even happens, 1884 needs to be broken through. I want to emphasize how important it is to pay close attention to 1884 and what goes on, because the bulls can reappear and bring this one back up and actually recover right, and back into bullish territory, and the tug of war can kind of happen in between these numbers. But I'd pay very close attention to how quickly it breaks through it. Are the bulls trying to reappear, or are the bears tearing through this significantly and hitting newer lows fairly quickly, getting into bearish territory and deeper into it in a downward direction? Hope with these cues and information and points of reference, you guys will be well equipped to make your own rational decisions as investors for tomorrow. If you learned something new or found this video helpful and informative, please hit the subscribe button, but don't just hit the subscribe button. Also, click on the bell so that you guys can turn on all notifications and not miss a single video that I post. Share this with your friends and community. Don't forget to hit the like button and let me know you watch this video. And at the end of this video, there's going to be a pop-up video. It's a video where I've been talking about how the market has been benefiting from the Federal Reserve pumps and why it's been rising, and also talks about the S&P 500. So if you guys aren't aware of that, there are certain companies, American companies, that are benefiting from these pumps and actually making their stocks go up 30 cents to $2, $3 per share. And it's not a lot of gains, but in the short term, gains are gains. So I want to talk about some strategies and a little bit of more information on that in regards to what's been working for me and how I've used this to my advantage. These 30 cent to $2 jumps, $3 jumps in a matter of a day or two due to these pumps. And per share, it may seem like a little bit, but if you get a significant amount of shares, there are some gains to be made. And I just want to go ahead and enlighten more investors on this information that many of them may be overlooking it. Not many people are talking about it, or some people know about it. They just don't know to or aren't too sure um, about it. So I'm here to break it down and inform you guys and enlighten you guys on how it's worked for me. And obviously, you guys have to make your own rational decisions and due diligence and research based off of what you find. But I also want to state I'm not there to tell you guys to buy, sell, or hold. I just want to share the great news that there is an opportunity to make money while it's been going up, right? The market's been going up, and even as it's been going down, because if we look at the S&P 500, it's actually slightly fell from its all-time high here of like 3,500. We hit 3,200 and some change, and we're back to 33. And today was the day of the pump. So check out the video. It talks about how it was reacting yesterday, and look at the S&P 500 today, and you'll get a little bit of a clearer picture of what's been going on and how it actually works. And if you don't feel too sure just yet, you can sit down by the sidelines, but at least you're enlightened and aware of these opportunities for the next coming weeks. I do a series weekly talking about this information and the scheduled pump, so don't miss it out. Go ahead and click on the button as it pops up. I think the video has already popped up if it hasn't already. Just wait for it, click on it, and thank you guys so much for watching, and let's make some money.